Clearly, the supply-demand conversation is a closed equation, and there are a finite number of items in that equation, and the demand is outstripping supply, and the supply side of this, the farmland, fertilizers, chemicals, seeds, the lack of evolution of even genetically modified seeds producing more. All of these things argue for demand outstripping supply. You also have this bigger conversation, which we characterize as the erosion of your purchasing power, which is a direct function of the world banking structure, and it is not going to change. And so the central banks and the bankers of the world have got a worldwide alliance. The infrastructure we talked about, the interrelationship where people are borrowing money and then diluting their currency base by printing more of it, more fiat money, and paying back in dollars that are worth less than the dollars that they borrowed. There's that dynamic, and the other dynamic at play here is that dilution then creates a game of musical chairs, and all the other currencies are out there trying to figure out, how am I not going to end up the strongest currency here and damage my import-export balance of trade? So they're diluting their currencies. So now what does it mean when we have more of this out there? Inherently, it's inflationary. So you've got that dynamic in addition to the supply-demand dynamic going on. 30 years ago, the U.S. decoupled in their CPI inflationary graph. They decoupled food and energy. So for 30 years, we're told the CPI is this, but it doesn't include food and it doesn't include energy. And this food dynamic that we've been discussing is clearly this closed equation of supply-demand shortfall in terms of supply to meet the demand. And so there are people out there of good scientific repute who argue that real inflation is more like 8 or 9%. This is a compelling figure to add into your equation. We cited a number from the UN data stacks of something on the order of 150% increase in grain costs over the last 10 or 12 years. This is a real number, and we get fed it in, oh, it's only 1% or 2%, don't worry. But then you have a surge in 2008 in Egypt, which was really driven by the banking community. And there's where the misbehavior is happening. Behind the scenes, the use of derivatives, very complex financial structures where they were taking a lot of risk, and the public ended up paying for that risk that they were taking.